An S corporation can save you a ton of taxes, but is it right for everybody? When is it right? When is it not? How do you go about setting one up? What are the differences that you have to do, and what's the extra cost? We're going to talk about that. My name's Brad. I'm with Wooten CPA. My goal is to bring peace to your tax and accounting responsibilities. Please like this video, share it with others, and subscribe to the channel so that you stay informed. First off, the reason why most people go with an S corporation is to save taxes, specifically Social Security, Medicare taxes, or self-employment taxes. The reason is because when you are a Schedule C sole proprietor, where you just start up a business without any sort of entity, then you're that sole proprietor. All of that business income and expenses goes on your personal tax return on Schedule C. That net income is subject to income tax and self-employment tax. Self-employment tax is Social Security and Medicare. It's roughly 15% of your net business income. Now, there is a wage cap for Social Security, so if you get above that, you won't pay the Social Security piece. But that's going to be subject to all of your net income on Schedule C. When you move to an S corporation, you have two different types of pay that you will take from the S corporation. One is W-2 salary, and one is owner distributions. The W-2 salary is still going to be subject to those same Social Security Medicare taxes. They're no longer called self-employment taxes, they're called FICA, but it's the exact same Social Security Medicare tax. However, your owner distributions are not going to be subject to that. So the W-2 and the owner distributions are still going to be subject to the exact same income tax, but your owner distributions are not going to be subject to that roughly 15% Social Security Medicare tax. That's where the tax savings come into play. That's why most people will elect to be treated as an S corporation, is for those tax savings. And think about this, if you have a owner distributions of $10,000 that's not salary, at 15%, that's going to save you $1,500 in taxes. So now if that difference is $30,000, that's going to save you $4,500. $40,000, that's going to save you $6,000. So the more that you can do as owner distributions and the less you can do as W-2 salary, the more tax savings you have. But wait, hang on one second. Do not turn this video off because you cannot stop there. That W-2 salary can't be just what you want it to be. It has to be reasonable compensation. And there are court cases and there is code to talk about what reasonable compensation actually means. I always tell people to start with common sense. It's reasonable. If you're working 40 hours a week as a professional, let's say a lawyer, on your own, and you set up an S corporation, 40 hours a week, full time, you're bringing in $300,000 of net business income at the end of the day after expenses, is it reasonable that you would work for a salary of $50,000? No. That is not reasonable. You would not go do that job anywhere else for $50,000. That's not reasonable. You can't do that. You have to pay a reasonable salary. So if the tax savings is the difference between what you're making and the reasonable salary, then our starting place is, what's the reasonable salary? Now, I just told you, you can't pick that number out of thin air. It has to be reasonable. You have to put some thought into this. You can't just do what some people out there are saying, pay 50% of whatever you're making as salary, pay 30%, pay 40%, pay a flat salary of $24,000 or $50,000 or $60,000 a year. There is no cookie cutter answer. You need specific advice based on the job you're doing, how much money your company is bringing in, and exactly what roles you're doing for your S corporation. Because when you're a lawyer by yourself, you're not just in the courtroom, you're not just advising clients, you're also doing some of your own bookkeeping maybe. You're also answering the phones, you're also doing some admin work, you're also maybe doing some of the paralegal work. So there are other roles that factor into this reasonable compensation. All right, now that we've got that out of the way, what's the next step? Well, you need to actually set up the S corporation. So there's a couple of different ways to do this, but the most common way that people do this is they will set up an LLC, a limited liability company. That doesn't do anything for you. You don't get any extra business expense deductions. You don't get any extra things available to you. It doesn't save you any taxes. In fact, it changes nothing for your taxes if you are a one owner LLC. But you can make an S corporation election now that you have that LLC to be treated in terms of the IRS and the tax code as an S corporation. So that's Form 2553. You set up your legal entity, you make your S corporation election, and now for tax purposes, you're treated as an S corporation. That means you have to file a separate tax return for the S corporation. It no longer goes on your personal tax return. There's extra cost for that. That's going to cost you more. You also have to be on W-2 payroll. So whether you go online and find a payroll service to do it yourself or you hire someone to do it, there's extra cost there to have payroll. You also have to do a few administrative things differently. So instead of just tracking business mileage and sticking in the miles on your Schedule C and getting a deduction for that, you actually have to submit a mileage reimbursement to your company, the S Corporation, and get reimbursed for that. Same thing for the home office. You also need to have an accountable plan in place. You can't do tax-free reimbursements without an accountable plan. That's in the tax code. So you have to put the accountable plan in place. You have to put the expense reimbursement policy in place, and then you have to actually do the reimbursements. Look, I know you can do these reimbursements through journal entries. I'm an accountant, I'm a CPA, I understand this. So if you're knowledgeable in this, don't come at me and tell me that, no, you don't have to do the actual reimbursements. I understand how to do the journal entry. I know you can do this after the fact. My point is that does not qualify as an accountable plan. And if you get audited, the IRS is going to tell you you don't have an accountable plan because it has very specific requirements of what you have to do. All right, so we know that it can save you a ton of taxes, possibly. We know that you have to have reasonable compensation first, and then you have to have some amount of income above and beyond the reasonable compensation in order for this to make sense, to save you taxes, to justify the extra costs that we went through, and the headache of doing a little bit of extra admin work. So how do you know if it's right for you? You have to get professional advice. You have to look at your situation. Now, I will tell people the most generalized statement I will say about this is that right now, under current tax law in 2025, given QBI and a couple other things, you need to have a gap between reasonable compensation and what your net business profit is of at least $40,000 to save enough in taxes to cover the extra cost and still put enough money back in your pocket to make it worth it. That is still not a blanket statement. I was talking to somebody recently and I advised them that, hey, here's what you would save if you went to an S corporation. It was about $20,000 in taxes they were going to save. And it was only going to cost them an extra $3,000 or $4,000 in cost. So that was a $16,000 savings that it was going to provide in their specific situation. And they chose not to do it. And that's fine with me because I'm just an advisor. Would I have made that same decision? Maybe not. I probably would have saved the $16,000, but I'm also an accountant. I'm really good at the admin piece. The extra steps don't really bother me at all. This person was like, I just don't want to have to deal with all that. I want to stay on Schedule C. I'm making a ton of money. I really don't care about the $16,000 that is saving me. It's not worth it to me. That's their prerogative. I can't decide what something is worth to someone else. I'm simply the advisor, giving the information and letting my clients make the decision. Now, look, I know that I left some stuff out. Also, this is not tax advice. Don't watch this video and then go set up an LLC saying that, oh, I think that my reasonable comp is this and the gap is this and it's going to save me taxes. There are other things at play here. Does your spouse work? Do you have another W-2 job? Is this a side gig? What's the industry? There's so many things that are at play here that this is just a general overview to give you an idea of maybe this makes sense, maybe it doesn't. Also, a big part of this video is to dispel all the lies out there. There's all these videos telling you that the S Corp is right for everyone and how much it's going to save you and that your reasonable comp can be 50% of your income. It doesn't really matter if it's reasonable or not, that you can just do it this way. Those things aren't going to hold up if you get checked by the IRS. The people who say, I've never been audited before, great. The IRS sucks at catching this. There is an audit done every year by a third party that tells the IRS you're not catching people who are doing this wrong. So if anyone tells you that they have a strategy and it's good because they've never been audited, well, maybe the strategy is good, but it's not because they've never been audited. The IRS misses more than they catch. So that doesn't make it a good strategy. So get advice from somebody who knows what they're talking about, who's given you specific details for your situation. Don't watch a video and then go implement it yourself. I see people do that all the time, and the videos aren't giving you enough information. Even if they're giving you accurate information, which I hope mine are, it's not enough information to go actually implement this without reaching out to somebody. I hope this video was helpful. Again, please like it, share it with others, subscribe to the channel. Thanks for watching.